Innovative, fragmented, and impossible to ignore, APAC truly is a payment paradox. So in this session, our panel is going to uncover the realities of cross-border flows, tackle compliance challenges, and examine the contest between global rails and local champions. So let's give a warm welcome to our moderator, Christia Evagorou, Group Deputy CEO at Payabl, who is going to lead this exciting discussion. Christia, the stage is yours.
Thank you so much. Hi, everyone. I hope you're all enjoying today's conference. We're certainly excited to be here to have a great discussion today about payments. When you're talking about online trading platforms, you simply cannot ignore payments. It's not an afterthought. In fact, banks, payment processors, payment rails is really what makes the money go round. So here we're today talking about money flows and payments. But for today, I'm joined by a panel of experts in the field. So with me, I have Gary Nai, Product and Marketing Manager for Swift APAC. Together with us also Jonathan Low, who is the CEO of BIPAP. We're also joined by David Morema, also CEO of Virtual Pay Group, and Tim Ferland, CEO of LetKnow Pay. Welcome, guys. But let's focus today on payments in the APAC region specifically, which seems to be leading the world instead of real-time instant payments. And I'm trying to figure out why that is. What do you think has led to this success? Tim, let's maybe start from you.
Well, from a crypto perspective, I can talk about that. But in general, just coming to the APAC region, understanding cultural differences, understanding payment processing issues, understanding regulatory issues going from country to country. There's no harmonization across that, so you can't go to one country and expect the next one's going to be exactly the same. In Europe, we have MiCA coming in for crypto payments, for example, and there is more of a homogenized regulatory environment for payment institutions in general. So that's one reason that instant payments and things like this have been a little bit slower in adoption, although there are changes coming.
Yeah, Jonathan, go ahead.
I think the biggest reason why APAC is leading this whole financial revolution is because Hong Kong, Singapore has been a financial hub for a long time, and a lot of the regulations and the policies that these APAC regions have is more on in the next 5 to 10 years. Whereas a lot of other countries like US or in the West, a lot of them are very reactive. You know, like in the market trends or something happens in the US and then they get afraid and then suddenly they ban Tether, they ban USDT. And then it's the biggest problem with countries in the West is when they make a huge change, they don't have an additional solution to the problem. Whereas in APAC, something that I've been noticing in the last 5 to 10 years is every time APAC region change any policies, they always have a ready solution for everybody to adopt. So I believe this is one of the biggest reasons why APAC is right now still leading, because the policies are very mature and it is very already ready for anti-money laundering purposes. You know, a lot of regulations is already with that in mind before they make the implementation.
Yeah, and I want to echo a little bit more on Jonathan, what you said about policies and regulations, because in APAC, we actually see a lot of central bank and regulator very supportive about instant payment, right? For example, we see that, in the ASEAN region, we have Project Nexus driven by the BIS Innovation Hub, interlinking different instant payment systems together. And also, like, for example, in Australia, right, we have NPP, their domestic instant payment system, but NPP is able to process the cross-border payments, the domestic leg of a cross-border payment in an instant way, 24/7. And all of these are supported by the regulators, of course, but at the same time are also driven by the growing expectation from a consumer perspective, right? Because different consumers in your domestic markets, you also have instant payment schemes and infrastructure. In Hong Kong, we have FPS. Singapore, we have Fast, right? So all of these are actually making our consumers feel like the expectation that they have for domestic payments can actually be the same for cross-border payments. So that's why these growing customer expectation and together with the regulator support, drive APAC's instant payment.
Thank you for that, and I think it's very interesting all the points that were made here, because from the SWIFT side, you can actually act as that, let's say, orchestrator or mediator to actually bridge the gap of fragmentation that you spoke about. So maybe let's delve into that a little bit more, because when we're not talking about SWIFT with the payment rails, right? Jonathan, you mentioned that Asia Pacific region is in the forefront of, expecting what's to come and being ready for it. But how do you deal in such a vast market with so many different regulations and so many different types of different components of the
That's what makes it exciting.
Absolutely.
That's what makes it very exciting. Hello, audience. Greetings from the great people of Kenya. We view Asia Pacific from an outsider's perspective. And when we look at all of APAC region, first of all, the level of diversity. Every country is different from the next. And they are all huge countries. But the one thing that we haven't picked up is that Asian community are very good adopters of technology. Every Asian person you meet, including children, have a phone. They know how to use their phone because the phones are manufactured here. And with that, then comes a whole diversity of payment methods that can be practiced. And we are happy to experiment here. The regulators in Asia Pacific are agile. They are not stuck up. And that's what makes Asia Pacific as vibrant as it is.
I absolutely love your take on this, because actually at Payable we have this journey of actually entering into the Asia Pacific market, and we are equally as excited, but I have to tell you that we also see the challenges, especially because of the diverse ecosystem that goes on here and all the different regulators. So maybe let's hear more from the panel about that and what you guys experienced in trying to join in the market.
Yeah, I wanted to add on to that is one of the things I'm very proud of as being Asian is a lot of our regulations, not just technology, a lot of our regulations are not very only agile, it is actually it's created for users' flexibility and for user experience, right? Whereas a lot of other regions, the regulations are for control.
For stifling.
For stifling, for bottlenecking, to
100%.
control and to over-regulate for tax purposes or for I don't know what purposes, too sensitive to mention, but in APAC, a lot of regions, a lot of solutions that they create and new technologies is to make it instant, cheap, fast, efficient, cross-border, even ASEAN region or APAC regions, right? There's a lot of inter-country agreements that allows all Asian countries to actually do instant transfers, cheap.
But those
fast.
regulators are also willing to take risk. Because
Exactly.
as a regulator, you have to be willing to take some risk. There will be some level of money laundering risk you have to take. Then we do the experiment. We will fix what we made mistakes on. And that's how Asia Pacific really grows
they
in
grow.
payments.
Exactly. Because they first have to understand and then they have to assume the risk instead of trying to just block completely.
Correct.
Because it is inevitable, right? Money laundering is everywhere, all over the world. It's not just in West
You can't completely
countries.
stop it.
You cannot stop it. You can only try to control it.
Or try to understand it maybe, and that's why lots of governments and regulators have sandbox approaches that can aid that. That's really interesting to hear how the regulators are maybe minded slightly different than how we are experiencing it in Europe and in the UK. Let's move a little bit into how we can help orchestrate all of these different components, and maybe talk a little bit about super apps that we know are quite exciting in the region. Jonathan, maybe you can give us your take about how you think super apps would be either consolidating the payments ecosystem or trying to orchestrate it.
Well, I believe super app, ecosystem, banking orchestration, collaboration is the future. Because no one entity can be everything, right? Like look at WeChat. It's not just one huge entity doing every single thing. I mean, they have every single thing, but it's multiple entities collaborating in that one super app. So I believe that is the future, something like what we are building to. Because like you mentioned, fragmentation all around the world is not just in the West or something. All around the world, the banking is fragmented, right? The only way to actually integrate everything together is using banking, open banking or banking orchestration.
And lots of collaboration.
Lots of collaboration, because the only way to have access, for example, we just signed a deal with the president of Central African Republic, right? Because in Africa, no matter how complex the banking infrastructure is, it's still Africa because of the political region, right? An African user is so difficult for them to be able to receive bank transfers overseas. But what if we have an open banking global infrastructure where we can then white label this banking into Africa, and now African users have access to more than 10 different banks all over the world with one app. So I believe this is the future.
Better regulation, because then the global apps are better regulated. The African regions are not so good at regulating yet.
Exactly.
So we get the best of both worlds.
Leveraging on each other's strengths.
Correct.
I think that is the future.
Correct.
And that makes a lot of sense to me, because that's exactly the path that we are going down at Payable as well. Would you say that's the same for you, Tim, or would you go for a more of a direct approach into entering the Asia Pacific market as a payment processor, or would you go through the partnership route and trying to create some sort of a all-rounded solution?
It's a combination of both. You have to have short-term and long-term plans to get into a market. It's easiest to take on a partner, collaborate with them, use their services, share your services with them. We have a lot of partners that we do this with. We have crossover onboardings where we have accounts with them and they have accounts with us. And this allows them to utilize services that otherwise they would have to get their own license and start getting the technology lined up and things like this. It saves everybody a lot of time to be able to go into a new market and attract customers and be able to perform within the regulatory environment. And then long term, you have to be able to evaluate, is that market somewhere that you can thrive by yourself? And then you, of course, take the steps to go through the regulations and everything to move forward.
Absolutely. But we are here today in a forex conference, so maybe let's just switch the conversation onto that more specifically. So guys, how would you say that this instant payments adoption has aided in changing the FX, the way the forex operate in the space? Do you think that that has been a good thing, a bad thing? Has it changed at all how forex market operates across?
No, it's been a beautiful thing. I'll tell you why. The way efficient market hypothesis requires that you need very, very many players, so that no one group of players or one player that controls the market. So you need lots of traders, you need lots of payment methods, you need many, many players to make the system efficient. And before, the forex industry had very few options in terms of receiving payments, in terms of making payouts. But now with all the dynamism that has come in, and the way the forex market has evolved to be so dynamic that they even carry insurance in there, they have so many other things, that has made the market definitely more efficient and reduced cost of business.
I fully agree with you, and I think that additional products like banking as a service and crypto also enablement, that also helps. So maybe if I could hear from my other panelists on the matter.
I want to add on to what David said, because that's exactly the target market that we have been working with. Because forex and brokerages are one of the four industries that always get debanked, right? Forex, adult industry, crypto, and also gambling, right? These four industries, they are legal in many countries, illegal in some, right? But the thing is, many countries and banks, they don't understand and they cannot regulate, and they just completely debank them. So how are these companies with licenses going to operate if every country's banks keep debanking them? So that's why, like what David was mentioning, right? The only way to solve this problem is open banking or banking as a service. And the reason why is because, similar like what I was mentioning, right? It's impossible for this whole company or this whole license gambling platform or forex platform to rely on one bank. Because when the volume gets too big, which they will, imagine the whole operation relying on one bank and suddenly they get debanked. It's so difficult for them to find another bank, right? But what if the solutions that they are using now is a platform integrating to more than 10 to 15 different banks? So one platform gets burned, one bank gets burned, there's multiple banks for their users to use. So I believe in the coming future, this is what I foresee, right? I strongly believe industries like forex, gambling, these industries will slowly move on to banking as a service because everybody needs to have their own banking as a service solution and not rely on one single entity.
I'll just add to that really quickly because he's right. Because of the risk of being debanked in one of these high-risk industries, you have to have redundancies in place, whether it's a crypto service, whether it's a bank service, PSPs, etc. You have to have different opportunities to be able to spread out your risk. As far as only open banking being the solution, I would have to disagree in that crypto payments are a solid solution, although they're still considered high risk. The regulatory environment has continued to increase and make them more regulated and more trustworthy. And we see more and more competitors falling out of the market because they can't keep up with the regulatory demands. So instant payments using USDT and other stablecoins, for example, is a worldwide phenomenon. I was telling you about this research I saw just yesterday, that there's a 40% adoption of instant payments with stablecoins in the APAC region, more specifically related to remittances from one country to another, so the cross-border payments going from whether it's a migrant worker sending money home or somebody buying something online. This is a new trend.
And when you talk about remittances, that's the first point of adoption right there, but then you can extrapolate that to entire markets of consumers and people, which will lead to further adoption. Yes, Gary?
Yeah, and I would just like to echo a little bit more on the regulation, right? Because there are, of course, a lot of new technologies that are, emerging, but definitely regulation is a key part that we all have to address. Because actually, when these technologies get mature, right, definitely the regulation will kick in. And for example, like in traditional banking rails, we are facing also a lot of regulatory requirements, right? With SWIFT, we have done a lot of studies on what the traditional banks are facing currently. For example, banks in APAC actually have to collect payment purpose information from beneficiary when they receive a cross-border payment. Like, for example, in China, Korea, Japan, all of these markets, right? But imagine if these requirements actually apply to stablecoin transfer as well, right? So really, I also heard in previous two panels, they are all mentioning like the regulation is really what is driving, the future of payments and how the future of payments is moving forward. And what I want to emphasize is that with all these regulations in place, actually, the future of cross-border payment is just not about building a faster rail or a faster delivery speed of technology, right? It's also about building trust and a trusted highway of payments, basically, where we see innovations and regulations have to move hand in hand together. And for these, I think for APAC regulators, as Jonathan mentioned, they're already starting to innovate on this, right? Using back the payment purpose example that I mentioned, the Japanese regulators are actually introducing a based approach for the banks to collect payment purpose information, and China, Korea introducing value threshold based approach, right? So all of these are actually showing how the industry and the regulators are making these strategic shifts to basically, unlock the value of cross-border payment and without compromising the control as well.
Actually, with the point you just raised, there's a very interesting casing point for that. Visa Direct. Visa has not been able to push Visa Direct for years because regulators don't know how to handle that movement of money. Who is moving the money? And the banks will not touch it. So Visa has the solution. They have licensed all the banks to do it, but the banks won't do it because the regulators will not let them. And Visa has to find a way to work with the regulators to figure out a way how they can be like SWIFT. But until now, not yet, because even issuers refused to accept money moving on Visa Direct.
You're absolutely right, although we are paying a lot of money to Visa, so, let them figure it out. Okay, well, excellent points actually that you make, and you're absolutely right. In my view as well, the payments game is becoming increasingly commoditized. So it's no longer going to be a cost issue or who is the fastest. I fully agree with you. It's going to be a completely different game when we onboard all of these other products. Okay, so mindful of also time, maybe we could each have a take about how we feel like the APAC region is going to sort of look in a few years from now. What opportunities are out there? What's there to expect? Maybe let's start from you, Tim.
I would first start by giving Jonathan credit for his comments about open banking and these connections of collaborations between different types of payment institutions, including crypto. I think that's what the APAC region is going to be adopting. You're going to see more and more of these companies coming together, sharing services and trying to provide a top-level service for all these regions. I think that instant payments using different mechanisms, including stablecoins, is going to become more and more popular as we go forward. I think regulations are going to begin getting homogenized, where countries begin to work together to try and figure out how to stop money laundering, financial crime, and things like this, just simply because of cross-border payments. And I think that that's going to be, as Jonathan was saying earlier, in this region, they're not making decisions reactive like in Europe and America. They're making plans for 5-10 years in the future.
Very interesting. Thank you so much, Tim. David, maybe.
Yeah, I agree with him. The way I see APAC is it's going to continue being on a roll. And there'll be more super apps, there'll be more collaboration, there'll be more regulatory innovation. Asia is not going to stop.
I believe I have already mentioned earlier, and I want to highlight the fact that in Asia, the very, very good thing that has been going for a long time, I think decades, is Asia, because Asia was not a superpower for the longest time. So all Asia focused on is building, improving, while the West and the US fighting on control, trying to build stuff to lead and monopolize the whole world. All Asia does is integration, building, improvement. So in the next 10 years, while the world is still trying, because now we are all in a very sensitive times, right? I don't want to dive deep into that, but the world is trying to have a huge shift. And what we all finally see is the foundations that China has been building, like China, APAC. A lot of things has already been so matured. So I believe the future, even like what Tim mentioned, right? Stable coins Asia is one of the biggest use case of stable coins. I believe just APAC region alone, there's like Circle reported like 2 trillion in stablecoin activity just 2025 alone. And it's like 50 to 60% growth year on year for the stablecoin use in APAC. So I believe in the near future, stablecoins will be huge, leading the change, and also open banking.
Yeah, I think from my perspective, I think first of all, interoperability and standardization as well, right? So definitely the future of APAC payments is going to be interoperable and standardized, right? And we can already see the industry is taking very many big steps to achieve this, right? For example, our banks and on the SWIFT network are actually conducting the ISO 20022 standard migration, right? To move away from the legacy MT format to, a future-proof payment modernization standard that allows, in the future, many more new technologies to be leveraged on the SWIFT network, right? And we also, let's say, also connect the SWIFT community with different systems and different networks as well. And one of that can be the Super app and also Super wallet here. Let's say, for example, in our recent collaboration with Alipay Plus, we actually enable SWIFT bank accounts to send payments to e-wallet accounts using a wallet aggregator like Alipay Plus. And also, we are also interoperating with many other different systems, right? And we're embracing new technologies, and because we are seeing the value of these new technologies. Like recently, earlier this month in Cybos, Frankfurt, SWIFT actually announced the addition of a blockchain-based share ledger in our infrastructure. Right. So it actually shows that we see a lot of opportunity in this fragmented world. But these opportunities will definitely lie on interoperability of different standards. As I mentioned, the ISO standard, and also not only on the cross-border space, right? And also with different domestic market infrastructure also moving towards ISO. So that's why we have a more harmonized cross-border payment standard. And also, this is harmonized with the domestic payment standard as well. And then also, on the other hand, with different ecosystems and also different technologies. So this is going to not only be in APAC, but also the future of payments globally, I would say.
I couldn't agree with you more there. We need to make sure that all technologies align, or we at least are able to offer that to all of our clients, most of whom are in this audience. Otherwise, the name of the game would be entirely different for us. So with that concludes our today's panel. Thank you all very, very much. We have some time for Q&A from the audience, if there's any. Right. So thank you all very much. Thank you. It was all very insightful. Let's converse further over coffee. Thank you all very much. Have a good afternoon.
Thank you, Christia.
Thank you.